Hi everyone and welcome to the London session update with myself, Kathleen Brooks, on Wednesday the 17th of July 2013. Well, it has been a busy day for central banks. We've seen the Bank of Canada remain on hold. We had Bank of England minutes that were a big shock to the market. I'll talk to that to you about that a bit later. And we also had Ben Bernanke. He is currently testifying to Congress, to the House of Representatives in Washington, and he really has caused the markets to move quite a lot. Now let's take a look at this cable chart, because it was really all about the pound today. We saw the pound strengthen on a broad-based basis, and the reason for this was that the minutes from the Bank of England meeting, the first one that was held by Bank of England Governor Mark Carney, showed that no one voted for QE. So two members who had voted for QE really since last year, they decided to join the governor and not vote. Now this was important for a couple of reasons. Number one, it suggests that Carney may not be the conventional dove that we thought he was. And number two, it suggests that, there may not be any more QE. So what else is in the pipeline? Well, don't worry. It looks like they're looking at even more unconventional measures, and we will find out more in August when they said that they will debate them more thoroughly. We also get a Bank of England meeting on the 1st of August, and then the all-important inflation report on the 7th of August. That would be a great opportunity to communicate potentially a new strategy or a new type of policy that they may use, potentially something like forward guidance, even though the minutes were very clear that that forward guidance, even though it was mentioned in the statement of the July Bank of England meeting, is not necessarily a given. Now, what does this all mean for the pound? Well, for the pound, that has had a very volatile day. Now, it is certainly trading at the upper end of its range. We did take out the highs from last week. We got all the way to 152.65. That is a noted level of resistance. That is the 100-day moving average. We backed away from there, and since then we've been kind of oscillating around about that 152 mark, 151.70 to 152. So we haven't managed to hold on to those gains, but right now it looks like we are going to be a bit in limbo with this. If Ben Bernanke during his speech doesn't actually commit one way or the other to tapering and leaves it open to economic data, combine that with no more announcements from the Bank of England now until the next policy meeting at the start of next month, then we could be in limbo, trading in a potentially tight range with 152.60 to 153 on the upside in cable, and then the downside seems to be well protected between 150.5 and 151. Now, what about that Bernanke testimony? That was one of the key things on the market's minds today. They wanted to know, will the Federal Reserve start tapering in September, or will it be September taper, as some people have started to call it? Also, added to that, how will Bernanke distinguish between tapering asset purchases yet keeping monetary policy very loose and having interest rates at record lows? Well, he's gone some way to address that during his speech today. He did mention very clearly, though, that tapering will be very dependent on the outcome of economic growth, and there is nothing set in stone about tapering. So this September idea, yes, it could certainly happen, but if the economic data wasn't to follow through, then that would be problematic. It's all about the unemployment rate. They want to see further gains in payrolls, but they also want to see inflation stabilizing. Remember, inflation in the US is fairly low. So we do have a couple of things to be watching out for there. Let's take a quick look at the gold chart. Remember, gold very sensitive to QE, to policy changes in the US, and gold has actually just been oscillating. It reached a high of 1,300 but didn't manage to get above there. But yet the downside looks fairly well protected at 1,250. And we wouldn't be surprised if, as we lead up to the next payrolls report at the end of this month, at the beginning of next month, in a couple of weeks' time, if we don't actually range trade in gold, remember it is summer markets as well, that could be anywhere from 1,200 to 1,300. That seems like quite a tight range for gold, but it's going to be hanging on every word that Bernanke says later on today, and then also looking for more direction from that all-important payrolls report and the next FOMC meeting, which takes place at the end of this month. So it could be a range trading week over the next couple of weeks, but good luck trading today, and please do join us soon for more. Thank you.